What we can see is price is in a sell program. Why? Well, because price is displacing below discount arrays that formed on the left side of the curve. We have these two down close candles, which are bullish order blocks. Once displaced below, become bearish breakers. Why? Well, because we have a high, low, higher high, lower low. These bullish order blocks took out firstly buy sides and then sell sides. By definition, it's a bearish breaker. And I said as long as price remains below this price range, we anticipate sell side objectives being reached. And what we can see is that price retraced into this breaker, utilized it as resistance, and then expanded lower. And so draws of liquidity are lower, being this sell side liquidity pool here, November low, is in balance, and these sell side liquidity pools. And what we can see is price retraced into the breaker, and this retracement higher, followed by expansion lower on the daily time frame, is going to be a lower time frame market maker sell model. Just to prove it to you, this is the hourly time frame. We have original consolidation, left side of the curve, smart money reversal, right side of the curve. If you'll notice, the trades that I took this week were on the right side of the curve, and because we're on the right side of the curve within a market maker sell model, that means that every retracement higher followed by expansion lower is going to be a fractal market maker sell model. And I only took 2 trades, and those 2 trades were fractal market maker sell models. One occurred on Wednesday, where we had retracement higher into this inverse breaker, utilized it as resistance, and then expanded lower. And the second trade was when price retraced into Wednesday's low, formed a high, and then expanded lower into the previous week low. Now, what I said in the previous outlook was as long as price remains below this inverse breaker, then the sell program is valid, and we can anticipate previous week low to be the draw. What I also said was one of the scenarios I was looking for, which was scenario 4 that I laid out on Friday's outlook, was that price would displace below Wednesday's low, utilize it as resistance, and then expand lower. And what we can see on Tuesday, price utilized the low end of the BPR as perfect resistance, and then initiate a sell program below this inverse value gap, confirming that sell side is now the draw. Price retraced into this array, utilized as resistance, and then displaced lower below this inverse breaker. Why is this inverse breaker important? Again, this was the invalidation for the buy program when we were around here. And because IBDA has utilized it as resistance, support, and now resistance multiple times, this becomes an important price range. And therefore, this is my validation for the current sell program. In order for me to confirm a buy program, meaning displacement above this breaker, ES would also have to displace above its respective inverse breaker, because if one market produces CSD but another market doesn't, how do we know which one's telling the truth? And so what we need to do is we need to blend the two and wait for both markets to produce a change of the saved delivery, which is going to confirm that, okay, we're right, because the probability of that CSD being right is now significantly higher because both markets are in sync. So what I'm looking for going into NFP is the following. What we can see is that price has been consolidating within Wednesday's range. When price consolidates within a timed range, what we want to do is we want to wait for either side of the range to be reached, to be broken, and then wait to see how price will trade there. Either price will reject it or displace straight through it, continuing towards a drawn liquidity. And so what we can see is Wednesday's high has formed inside this inverse breaker. Wednesday's low has formed inside of this SIBI, which has been utilized as support, important price range. What I'm looking for is for one of 4 scenarios. Scenario 1 is for price to take out Wednesday's high, reject it, and then revert down to Wednesday's low and beyond. That's scenario 1. Scenario 2 is for price to displace above Wednesday's high, as well as this inverse breaker, utilize it as support to then confirm that buy side is the drawn liquidity. That's scenario 2. Scenario 3 is for price to take out Wednesday's low, reject it, and then revert to Wednesday's high. And then how price would trade here would determine if we're going to form a high to then continue lower, or displace above it, utilize it as support, and then continue higher. That's basically scenario 1 and 2. So scenario 3 is reject Wednesday's low and then revert to Wednesday's high. And scenario 4 is for price to displace below Wednesday's low, utilize it as resistance, as well as this imbalance here, and then continue lower towards the previous week low. Now, any of these scenarios could occur, but the main thing here is because we've identified a consolidation, the best thing that we can do is wait for either side of the range to be taken, because if this is accumulation, we want price to manipulate either above the high or below the low. So we have accumulation, manipulation, distribution, or accumulation, manipulation, distribution. And because we've identified a consolidation, this is the highest probability game plan for NFP. But again, all of this could go out the window post NFP. Price could just displace all the way into our drawn liquidity, or even all the way up here into our buy side objective. And so that's why it's important to wait for NFP to be released and then identify whether any of your scenarios that you've laid out are still valid. If yes, you then follow your protocol. If not, you disengage. Simple as that. Note also that if one market takes out the high or the low, for example, if ES takes out the high or the low, but Nasdaq fails to do so, that would be SMT, and therefore the other market, the correlated market, would not need to do so. That's just something else to keep in mind. And so that is my game plan going into NFP. I will of course send an update post NFP in the Telegram to identify which scenario is most likely to play out. And what we can see is that price retraced into that inverse breaker, utilized it as perfect resistance on price, then expanded lower below Wednesday's low. Price then retraced into Wednesday's low, utilized it as resistance. I then took a short. A trade breakdown will follow for the Telegram, but I took a short within this market maker sell model, targeting previous week low and beyond. And because price is now displaced below this inverse Vivali gap, which has been utilized as support, 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 once it's placed below, must be utilized as resistance. And so this is the invalidation for the sell program. And so as long as price remains below this price range, I anticipate lower prices because we have draws on liquidity that are lower. If, however, price is placed above this price range, utilized as supports, then I'd look for buy side targets. Very simple. One thing I want to point out is within this market maker sell model, we had original consolidation, left side of the curve, which is the buy side of the curve, smart money reversal, right side of the curve. Within this entire market maker sell model, I took 3 trades. I took a market maker buy model, which is this move here, this retracement lower, expansion higher. And I took 2 market maker sell models on the right side of the curve, being on Wednesday when we had retracement higher into this inverse breaker, utilized as resistance, and then expanded lower into this inverse Vivali gap. And then I took a final market maker sell model, retracement higher into Wednesday's low, expansion lower into previous week low. The reason I'm saying this is because if we're in a buy program and we have draws on liquidity that are higher, the highest probability trades will be market maker buy models. If we're in a sell program on the higher time frame, then the highest probability trades will be market maker sell models. And this is exactly how I operate. If we're in a buy program and I have draws on liquidity that are higher, I simply look for market maker buy models. If we're in a sell program and the draws on liquidity are lower, I will look for market maker sell models. This allows me to achieve a very high level of precision and accuracy. It means I take very few trades, 1 to 3 per week is my target. But because I'm waiting for the higher time frame to play out, I'm more patient, but the probability of the trades I take are significantly higher. And so this is something that I want you to take into next week. What if you just traded in line with order flow? If order flow is bearish, look for retracements higher and expansions lower on the higher time frame, which are going to be your fractal market maker sell models. If order flow is bullish, meaning we're in a buy program, then retracements lower and expansions higher on the higher time frame are going to be your market maker buy models. I know for a fact, if you just focused on trading in line with order flow, utilizing the economic calendar to tell you which days and sessions are deemed high probability, your win rates would skyrocket. Don't believe me? Try it. And of course, I will update you throughout the week in the Telegram every single day on how price develops across all markets. And so I will speak to you in the group. What we can see on the daily time frame is price remains in a sell program. Why? Because we're displacing below discount arrays that formed on the left side of the curve. We have these bullish order blocks. Once displaced below, become a bearish breaker. We've got a high, low, higher high, lower low. Price utilized them as resistance, resistance, and then displaced lower. Notice we've got this bullish order block, which was utilized as support, support. Once displaced below, must be utilized as resistance. But my eye is drawn to this imbalance here. This is an imbalance that needs to be revisited for order flow to continue being bearish, because this imbalance only had sell side delivery, so price needs to now reprice into it, deliver buy sides to then expand lower into our draws on liquidity, next draw being sell side and November low and beyond. And so as long as price remains below this daily bearish Vivali gap, next draw on liquidity is sell side. If price displaced above this imbalance, as well as on ES, this would then confirm that buy side is the draw. And what we can see is price is now retraced into that imbalance, so now I'll be monitoring for a high formation. If we now go down to the hourly time frame, what I said in the previous outlook was as long as price remained below this price range here, this bearish value gap, order flow remains bearish, draws on liquidity are lower, and what we can see is that price retraced into that price range, utilized it as resistance, and then expanded lower below the previous week low. I then put a message in the Telegram saying as long as price remains below this bullish order block, which again formed at the previous week low, order flow remains bearish, and what we can see is that price retraced into it, utilized it as resistance, and then expanded lower. Price then repriced back into it again, utilized it as resistance, and then displaced above it. This was then a change in the state of delivery due to the fact that this price range, which is the bullish order block, which then became a bearish mitigation block, which then became a bullish reclaimed bullish order block. Again, don't worry about the terminology. This is just a bullish order block, down close candle followed by up close candle, which was displaced below, utilized as resistance. That confirms that, okay, IPTA is now referring to this price range, and so it must be utilized as resistance, and then price is placed above it, confirming, okay, we're no longer in a sell program, we're now in a buy program. And so exact same scenario as ES, as long as price remains below this daily SIBI, as well as above this bullish reclaimed order block, then I'm neutral. Displacement above this SIBI would confirm that buy size the draw, and then how price would trade here. We'll determine if the previous week high is reached, because remember, we've taken out external range liquidity. So if price is placed above this daily SIBI, we can then anticipate price reverting to internal range liquidity, being at a premium of the previous week's range from high to low. Then how price would trade here will determine if external range liquidity will be reached. But because we have this daily SIBI, price needs to displace above this for that idea to be valid. As long as price remains below this daily SIBI and above this reclaimed bullish order block, I'm neutral. Displacement above this would confirm buy size the draw. Displacement below this discount array would confirm that sell size the draw. And so that is my game plan going into CPI. Again, I'll update you in the Telegram if my invalidation level evolves, because again, we could form potentially a bearish breaker or inverse value gap. And because we're at a point of interest, I'm now going to be looking for SMT, CSD, to then confirm that this is a market maker sell model. What we can see, exact same scenario, price took out the December low, displacing above this imbalance, producing a change in the state of delivery. And so the next drawn liquidity from external range liquidity is internal range liquidity of the December range. And so this imbalance is the next drawn liquidity on the daily time frame, and then how price would trade here would determine if we're going to form a high to then go lower, meaning this would just be left side of the curve, smart money reversal, right side of the curve, or if price is placed above this SIBI, utilized as support, this then confirm that December high and beyond is the next drawn liquidity. If we now go down to the hourly time frame, what I said in the previous outlook was as long as price remained above this reclaimed bullish order block and below this daily SIBI, I was neutral. Displacement below this price range would confirm that sell side is the draw. Displacement above this price range would confirm that buy side is the draw. And what we can see is that price displaced below this bullish order block. Why was this not a change in the state of delivery? Just to remind you on ES failed to displace below its respective invalidation level, meaning this was a false change in the state of delivery on NASDAQ, because when we identify CSD, we want both ES and NQ to produce the change in the state of delivery, because if not, then it's likely to be a false change in the state of delivery, which is what occurred here. ES failed to displace below the price range and in fact utilized as support, whereas NASDAQ displaced below the price range, but we knew this was a false change in the state of delivery due to the fact that ES failed to displace below the respective price range. CPI was released and price is placed above that daily SIBI, producing a change in the state of delivery, validating higher prices on that daily time frame. Price then retraced into the daily SIBI, utilized as support, then expanded higher into this imbalance and this buy side liquidity pool. This was a market maker buy model, retracement lower, expansion higher. I took this trade and I will release a trade breakdown in the group. What we can then see is price utilize this SIBI as resistance multiple times. Price then displaced above it, must now be utilized as support on price because IPTA has shown its hand. IPTA has shown this price range is important. Notice is also formed around equilibrium, which is an important price level. The PD rays that form around equilibrium of any time cycle, in this case the previous week's range, is important. Because price has taken out the previous week low, we can anticipate price, firstly, drawing towards internal range liquidity of the previous week's range, when we go from external to internal range liquidity. How price trades at internal range liquidity will determine if external range liquidity will be reached, being the previous week high. And because we displaced above this imbalance, This then validates the previous week high as the draw, as long as you remain above this imbalance. Next draw liquidity is this imbalance here, as well as the previous week high, as long as price remains above this inverse value gap. If price is placed above this imbalance, this hourly bearish value gap, it must then be utilized as support on price. And so this would then become the invalidation for the buy program. And so just to summarize, next draw liquidity is this imbalance here, as well as the previous week high, as long as price remains above this inverse value gap. What we can see on the daily time frame is that price displaced above this bearish value gap, which had to be utilized as resistance on price for the sell program to continue. In fact, price is placed above it and is now utilized as support, producing a change in the state delivery. And because we've taken out external range liquidity in the form of December low, what's the next draw liquidity? Internal range liquidity, where we go from external to internal range liquidity, utilizing timed ranges. How price will trade at internal range liquidity, which is the next draw liquidity, will determine if we're going to continue higher towards the December high, or if we form a high and then continue lower towards this sell side liquidity pool here, as well as November low. And so in other words, next draw liquidity is this imbalance here, and then how price trades this imbalance will determine if December high will be reached, or if we form a high and then continue lower towards the November low. If we look at the hourly time frame, what I said in the previous outlook was as long as price remained above this inverse value gap, which had been utilized as resistance multiple times, then the drawn liquidity was higher. And what I said in the market updates channel, order flow remains bullish and draws of liquidity are higher as long as price remains above the bullish mitigation block on ES and inverse value gap on NQ. This was the inverse value gap we're referring to, which is this blue shaded box here. If price displaces below these discount arrays on both ES and NQ, I would anticipate price reaching into the H1 imbalance that formed during CPI on Wednesday. As you can see, I've got this imbalance drawn in here, which is this imbalance here. What we can see is price displaced below this inverse value gap, utilize it as resistance, and then expanded lower into the drawn liquidity, being this bullish value gap here that formed during CPI, which also overlaps with that daily inverse fair value gap. Just to remind you, this bearish fair value gap here is this entire price range here. Why was I anticipating this imbalance being reached as a drawn liquidity? Well, because we took out external range liquidity in the form of Wednesday's high. And if you go into a sell program, what's the next drawn liquidity? Internal range liquidity, being at a discount of Wednesday's range. This is Wednesday's high, this is Wednesday's low, premium to discount, equilibrium is around here, and this imbalance forms just around equilibrium, so we can anticipate price going from external range liquidity to internal range liquidity. What we can then see is price displaces back above this inverse value gap and then expands higher into our drawn liquidity, being this bearish value gap. What I can now see is we form this bullish breaker where we have a low, high, lower low, higher high. As long as price remains above this bullish breaker on NASDAQ as well as ES, the next drawn liquidity is this buy side liquidity pool here, as well as the previous week high. If price is placed below this price range here, being this hourly bullish breaker, that would initiate a sell program, and then I would anticipate price moving deeper into this inverse value gap on the daily time frame. That is the game plan going into this week. Of course, I'll update you every single day with the game plan across all markets in the Telegram, and so I look forward to speaking to you in the group.